Hey San Diego, welcome back to the Apartment Geek. I've been in research land here for a few weeks, kind of trying to figure out where this market's going and talking to a lot of different people. And I've got some neat updates for my audience today. This is episode 49, Monsi reminded me, so I'm proud to almost hit a year. I always think 52 weeks in a year, and we're almost at that point, just on number of episodes. So I'm looking forward to keeping this going, and I want to make a couple announcements. So I've started writing I don't want to call it a book because that comes with a lot of baggage or thinking, but it's almost like an ebook or a guidebook for young entrepreneurs, and I'm super excited about it. And it's going to be real helpful for anybody who, even somebody who's seasoned or experienced, but I think I'm really going for people in their 20s and 30s who want to be self-employed. They want to hustle, for lack of better words, make a lot of money quicker than going the traditional job approach, and then turning that money, turning that capital and the mindset into really a dynamic business where they're crushing it, making a lot of money. And then it's going to be going really into apartment building investing, creating passive income. I love my life, and it doesn't all have to do with brokerage or I love helping clients, but a lot of it is the concept and the psychology behind getting your money to work for you and how to kind of stay in a focused lane to do that without getting sidetracked. I think a lot of young people, there's so much content out there that people kind of know what to do, but then they get distracted by all kinds of different people they hear talking or seminars they go to. So this is going to be a kind of a no BS, straight to the point ebook, and I'm going to release it to the audience. I've just started, maybe a month ago, and it's a work in progress. So very excited about that. I'll keep people posted on it. I think it's going to be really helpful for business men and business women. Update on the market. So it's middle of August, which is one of my favorite times of the year because my birthday is the 22nd, this next Saturday. But middle of August, we're starting to see a little bit more issues on rent rolls with delinquent tenants. So people that are kind of getting in a hole that's not just $500 or $1,000 balance, but some tenants, select tenants that are starting to owe $3,000, $4,000, $5,000, $6,000, $7,000. A lot of clients are complaining a little bit about it, but it's not across the board, so it's still pretty select. And now, that being said, is something that I think we need to be cognizant of, and I've got some interesting ideas on how you can kind of finesse or massage that. We can't do evictions yet. That's coming up maybe with delays in September. It's actually September 1. As of right now for San Diego County, we can start filing. We're kind of expecting delays on that. So keep me reach out if you want updates on the eviction situation. Rick Alter is a gentleman that I've used for, I want to say 14, 15 years. He's excellent. Him and his right-hand person, Kathy, they can help. This is not a plug for them. I just believe in what they do. And if you want their contact info, let me know. So the deals are selling. So listings that are coming online, a lot of these listings, if they're priced kind of through the sky, I should say higher than December, January numbers or values, those are sitting, and they are what we call kind of getting price reductions, every week or 2 weeks. I am seeing that. However, if an asset is listed correctly and if it's in a good location, it's still going to be at a really big number. Those are selling, and they're selling to people who believe in real estate long term. There's a lot of money on the sidelines I call it new money, and these are investors that have maybe a couple homes that they rent out or VRBOs, and they have $1 million, $2 million on the sidelines. They see multifamily as kind of a flight to safety, and they understand the fundamentals. People need a place to live, and they're still purchasing these apartment buildings and paying really big numbers. Cap rates are, call it low 4s to mid 4s, probably for your better locations. And then your C plus or worse areas, maybe some pockets of Southeast or East County, people know different submarkets. Those are probably 5% cap rates, maybe a little bit higher than 5%. And so things are looking good. Financing is really attractive. I've talked to a couple lenders in the last week. Rates are, believe it or not, for 5-year money, low 3s, call it 3.25. I would kind of conservatively bet on 3.5 if you're going to go refinance a property or go purchase a property. You're probably in the mid 3s, and that's for 5 or 7-year money. So very attractive. I mean, that's about as low as it gets. I remember selling a 58-unit deal 4 or 5 years ago on Willie James Jones down off the 805, so Southeast San Diego. The borrower got 3.25, and that was like crazy at the time, and that's still super low. So we're back to that same point. It's pretty much all-time low interest rates, and that's really what's driving the real estate purchases, especially in the homes. Anything 1 to 4 where you can get a fixed mortgage. That's why you see a lot of the home listings selling quickly. Some of my friends are residential brokers, and they're super busy, for lack of better words. So update the market, healthy, multifamily is resilient. We've talked about this before. Things are really, if things are priced correctly, they are selling. And there's a lot of people out there looking to purchase apartment buildings. Believe it or not, I think a lot of people will say, well, God, I don't know why they buy in this environment. It's still happening. So that's good news for us. We're staying busy. I listed a really neat asset over the weekend up in University Heights on Adams, kind of near the 805. So if anybody wants numbers on that or details, just reach out. So the last episode was about a call to the audience for topics that people were interested in hearing more about. And I funneled through responses, and the common theme that I want to talk about today is, where do I put my money? And I've even found, and that's a good problem to have, right? And I've even found myself kind of going, well, it's frustrating because a lot of entrepreneurs and business investors are feeling like we're just kind of treading water, and people who want to expand and grow and make progress, my whole thing is next level. It's been tricky because there's not a clear line of confidence on kind of what to do. And I get a kick out of the different camps out there who say, buy gold, stock market's volatile, I'm going to go down, bet against the dollar, we're going to have serious inflation. And then you've got the other camp who's thinking, go buy stocks because the values are good, and the stock market's going to come back sooner rather than later, and there's a lot of growth potential there, and the dollar is strong, you don't have to worry about it, etc. So, and it's interesting because both of these camps are led by super wise, wealthy, older people who've been in life, been in the game of business for a long time. So it's an interesting time because there's not a kind of a medium that's kind of middle ground that I'm seeing. I'm seeing these kind of extreme sides. And a lot of people that I talk to are like, I don't know what the heck to do with my money. They're buying physical bars of gold. They're putting a lot of money into Amazon or Tesla or Vegas hospitality stocks because they think those are good value long term. So I want to talk about the gold thing versus another option, which I think is light gold. I'm talking about physical gold here, and that's debt. That's mortgage or getting a debt on income property. So we're using apartment buildings because that's the discussion here. So when you go buy gold, and this is what I want to talk about for a couple of minutes. When you go buy gold, you're betting against the dollar. So you're looking to purchase something, say a physical bar of gold, that's going to give you more purchasing power down the road because you're locking into dollars today, and with the hope or the assumption that is going to increase in value. So it's a good hedge against a weakening dollar. Now, my whole life I've thought about why I like real estate more than the stock market. And all of the people I've met at parties or networking events, extremely wealthy people worth hundreds of millions of dollars. And there's a common theme. I made my wealth, I made my money in real estate. So the kicker with real estate is the leverage component. And debt, I always say debt, really good debt. So long-term fixed mortgage at a low, reasonable interest rate. I always say that's like gold. Now, it really is, because if you go purchase a 10-unit apartment building and you get a 70% loan and you put 30% down payment, that whole entire asset is going to appreciate over time because real estate appreciates in San Diego. So you're getting a hedge with that entire 70% chunk against the whole appreciating component of the entire property. So it's like this free, I think I'm thinking like trampoline, like a free trampoline of arbitrage to earn on the entire amount. Now, the cool thing about real estate is let me take this back. When I sell that gold in 5 years and say it's worth $2,000 an ounce now, and it's worth $4,000 in 5 years, and I think the value of gold will go up. That's my opinion. You're going to have to pay tax on the gold, and you're going to get a profit, but you're going to have a taxable event. Real estate, you have taken advantage of your debt component, which is the ideal hedge against inflation. You're making money along the way. Granted, apartment buildings are expensive and you're making 2, 3, 4% return on equity, which is pretty low. You've got depreciation, you've got tax shelter. Pretty easy to manage apartment buildings in San Diego. It's not rocket science. Now, when you sell an apartment building in 5 years and say you buy a 10-unit for $2 million and it's worth $2.4 million, $2.5 million in 5 years, now you can go into a 1031 exchange. One of my first videos I did for the Apartment Geek is about how beneficial 1031 exchanges are and to be aware of that. And it all came from this guy, this really interesting, successful guy in Canada that I met, who said, we don't have 1031 exchanges in Canada. The US is such a benefit for people in the US. So 1031 exchange, now you're taking your gain and you're going into a 1031 exchange, deferring your tax. You can go buy from a 10 unit, you can go buy a 15 or a 20 unit, and then just kind of keep going with it and building cash flow at the same time. So I think a good place to put your money now, kind of coming back to the theme of what I heard, is real estate debt. And I'm not saying buying tranches of loans. I'm saying purchase well-located real estate in an area that you like. So the beaches, North Park, Hillcrest, Ocean Beach, Point Loma, places where people want to live, and the desire to live there will not go away. So with COVID, there's some concern about downtown San Diego because of the density, and there's a lack of, open space kind of deal. That may be a little bit of an intimidating place to purchase right now on the psyche. But if you're looking at something that's convenient, but it's got some space around it, and it's in an area where there's parks and you can walk outside and you can get outside and have fresh air. And I keep coming back to parks or beaches, places where people want to kind of spend outdoors. Purchase real estate in those locations, get as much debt as you can, because when the dollar weakens, which it probably will, with the trillions with a T amount of money that's being put out in the economy, not in the next year or two, but at some point that dollar is going to go down, and that debt is going to be like gold for you, because that entire apartment building that you purchase, or whatever income property, even a house, that entire thing is going to go up in value as the dollar drops. That's just how it works, and that's the way it's been working for as long as people have been tracking this stuff. So what do you do with money? I don't have a crystal ball. There's these different camps. I like real estate debt that's long-term in good locations, because somebody's always going to want to live there. And if a rent right now is $2,000 and it goes down to $1,900, who freaking cares? In the long run, it's going to be super profitable. And I keep coming back to this kind of stuff has happened before in the United States. It's happened in other countries where we have major abrupt major disruptions, or call this a recession. Multifamily is going to bear really well, probably one of the best as far as resiliency, and I still think there's value in buying a house right now if you can get a really good big loan on it that's fixed and people enjoy living at this particular home. That thing is going to go up in value as well in the long run. So the debt's cheap. That's where I like to put the money now, is go purchase well-located real estate, get as much leverage as you can, and then try to make a little bit of money along the way. Take advantage of the depreciation. Maybe it helps you with your taxes on a holistic picture. Let me know what you think about that. I also think there's some really good deals on stocks, and that's really interesting too, because at some point this COVID is going to go away, and this stuff that has been just in the toilet smashed, there's a lot of the blue chip, really solid companies, those are going to go back. So I think kind of the writing's on the wall with that as well. We'll see what happens. So gold versus debt, those are my 2 cents. And lastly, I want to make note of the contacts that we have. And again, this is not, my whole thing here is I want to help people. And if I help people, then if you have a choice to sell your real estate, then maybe I'm the first person you call, or the second person's fine too. That's totally cool. But if I have a seat at the table, then this is worth it by helping people out. We have a number of really good contacts. So from Rick Alter, the eviction attorney that I mentioned, my utilities on apartment buildings I own have gone way up. So if you don't have a utility rebate system involved with your buildings, this is a perfect time to do it, where you're not raising the rents, because that's kind of hard. That's pretty tough to do now, but you're saying, hey, I need help with this water sewer bill. We're going to start charging the tenants a small percentage of the bill, and it's usually not a whole lot. And then, as we've talked before, that utility usage usually goes down. Lenders, loan brokers, who are doing the loans out there. We know the best lenders, the best programs, the pitfalls on some of them. And I talked to somebody the other day who's using Wells Fargo, and I go, I've been in this business for 18 years. Nothing bad about Wells Fargo as a bank in general, but I've never done a deal with Wells Fargo. They've never been the most competitive on an apartment loan. And this is like somebody who's been around for 20, 30 years investing in real estate. I go, they have no idea. So there's a lot of ignorance out there, a lot of people that think they know everything, and they're so proud that they don't want to reach out to me because I'm a sales broker and I'm going to try to close them into some meeting to go sell something. That's furthest from the truth. There's nothing about that in my agenda. I want to help. So let me know if there's anything that comes up that you need a 2 cents on, or a contact. I don't care if it's a gardener or a plumber. So we'll talk about that more. And then I'll keep everybody posted on the ebook that I'm writing that is really fun to do, and I'm just kind of going with it. So let me know how I can help. If you like these, let YouTube know on this, or subscribe, I should say. Send them to your friends, your family. And until then, be well, stay safe, and hope to see you soon.